Hello and welcome everyone. My name is Dane Menke. I am the Digital Marketing Manager here at Regenesis and Land Science. Before we get started, I have just a few administrative items to cover. Since we're trying to keep this under an hour, today's presentation will be conducted with the audience audio settings on mute. This will minimize unwanted background noise from the large number of participants joining us today. If the webinar or audio quality degrades, please try refreshing your browser. If that doesn't fix the issue, please disconnect and repeat the original login steps to rejoin the webcast. If you have a question, we encourage you to ask it using the question feature located on the webinar panel. We'll collect your questions and do our best to answer them at the end of the presentation. If we don't address your question within the time permitting, we'll make an effort to follow up with you after the webinar. We are recording this webinar and a link to the recording will be emailed to you once it is available. In order to continue to sponsor events that are of value and worthy of your time, we will be sending out a brief survey following the webinar to get your feedback. Today's presentation will discuss insurance to help manage remediation costs and risks. With that, I'd like to introduce our presenters for today. We are pleased to have with us Jeff Carnahan, President of Enviroforensics. Jeff is a professional geologist and his core passions are science and performing environmental cleanup. He has been helping clients put environmental liabilities to bed for nearly 25 years. For over the past decade, he has focused on helping responsible parties find and utilize old general liability insurance policies to offset the cost of remediation. At the same time, he leads the Enviroforensics consulting team of engineers and scientists in creating innovative and effective remedial solutions. We're also pleased to have with us today Richard Reich, Managing Director and Central Regional Leader at Aon Environmental Service Group. For the last 20 years, Rich has been responsible for developing environmental risk solutions in the insurance industry for a variety of clients. With more than 10 years of technical industry experience as an environmental consultant and EPA inspector, Rich leverages his vast knowledge of the environmental insurance marketplace to develop comprehensive solutions for his clients. Rich prides himself on coming up with creative and efficient solutions that protect clients to the appropriate levels in a cost-effective manner. All right, so that concludes our introduction, and now I will hand things over to Jeff Carnahan to get us started.
Thanks, Dane. It's a pleasure to be speaking with everybody today. Thanks very much, Dane, for inviting us to present on this platform today. My name is Jeff Carnahan. I'm with Enviroforensics. We're primarily a consulting firm, just like many of the audience members today. Our differentiator in the marketplace, however, is that we have a division called Policy Find. And Policy Find performs insurance archaeology to help find our clients' old commercial general liability policies and bring them to bear to offset the cost of environmental cleanup. We want to talk to you a little bit about that today because it's a very important issue. As funding our clients' remediation projects is sometimes one of the biggest hurdles we have to overcome. So Rich and I are here to talk about essentially managing risks. The concept of risk is one that it's understood and it's calculated by nearly every organism on the planet, right? The strategic avoidance of risk through insurance agreements was contemplated as early as the Babylonian Empire by humans. Back 4,000, 3,000 BC, there was what was called a bottomry contract. It was sold to seagoing merchants who had taken out loans to fund the journey with the provision that if the ship was lost at sea, the loan didn't have to be repaid. The interest on that loan covered the insurance risk by the people who provided it. Ancient Greeks and Romans also utilized similar risk avoidance agreements. So marine insurance became much more developed in the 15th century. I'm a little bit of a history geek, so I like talking about that kind of stuff, but ultimately that old maritime risk agreement model became the model for today's insurance market. We're talking a lot about liabilities here. The history of applying insurance products directly to environmental contamination risks, not nearly as ancient, of course, but the sequence of identifying environmental risks and developing insurance products to offset those risks has been ongoing since environmental contamination was first perceived and understood several decades ago. The development of new insurance products by the carrier market is an iterative process. As new risks are identified, the insurance market develops new products or policies, if you will, to sell to their policyholders to help manage those risks. For example, there were no auto collision policies around before there were at least 2 cars in existence, right? Cars became a thing, multiple cars caused collisions. The insurance market responded by providing collision policies. So just keep that in mind as the environmental industry has changed and morphed. The insurance industry has provided risk management policies along those lines. So during the presentation today, we hope you're all going to become familiar with how insurance products from the 19th and 20th century are still being used today to pay for environmental cleanup. Also, we want you to understand how the market has developed contemporary insurance products that are intended specifically to manage risks in the environmental arena. The primary risk addressed by old insurance products is financial in nature. Receiving coverage dollars from an old commercial general liability policy can help offset the cost of environmental investigation and remediation. For a policyholder who's also a responsible party, the financial contribution provided by the carrier also helps manage the legal risk after site's cleaned up and receives a regulatory closure. Now, typical problems solved through modern specialty insurance products like Rich is going to talk about can include the threat of an environmental release, the threat of legal action being taken against a policyholder, due to environmental issues, or the threat of encountering unknowns during a remediation project. And that can throw your budget out of whack. I think a lot of you will find that very, very interesting. So let's get started talking about old insurance. Old commercial general liability or CGL policies are extremely valuable assets. And when I say that these old policies are worth more than their weight in gold, I do mean that. One policy might have a limit of, let's say, $100,000 or $300,000 or even $1 million. Once you start pulling those all together and assembling them, they can aid in offsetting a significant cleanup cost. In fact, in some states, the majority of cleanup being performed overall is being paid for by insurance claims. So what's a CGL policy and why can old ones be triggered? Well, commercial general liability policies are those that nearly every business purchases to help them in the case of a lawsuit that could be related to just about anything, so long as it's not specifically excluded by the policy. Your business owns one today, and if a car drives through your lobby tomorrow, your insurance company is going to get a claim, right? Back in the old days, CGL policies were typically written such that only the occurrence needed to exist within the policy term. That the claim itself could come later. So let's put that in the perspective of an environmental incident, okay? So if somebody at a company with a CGL policy knocked over a drum of solvent, out back in 1960, that was an occurrence. But there was no regulatory agency in existence that would make a demand for anything to be done about it. There was no liability associated with that spilled solvent. But the occurrence happened, and it happened during the term of the CGL policy. It was only later, after environmental agencies began enforcing their new regulations and laws, that a liability to do anything about it was formed. So you can see how a spill in 1960 didn't really turn into a liability until what, 1970 with formation of EPA, maybe 1976 with RCRA, or 1980 with CERCLA. It depends, of course, but by the early 80s, there were liabilities for sure. So since that CGL policy written in 1960 to a premium paying policyholder was occurrence-based, the liability that was applied in 1982 could constitute a claim that could be tendered against that old policy. I know that spills and releases still happen today, but I think most of you guys will agree that a large percentage of subsurface contamination issues we're still cleaning up today occurred well before the early 80s, when there weren't good regulations telling operators how to handle hazardous materials and how to handle their wastes that resulted as their operations we're ongoing. So many of our clients didn't even know about and still don't know about some releases that happened 40 or 50 years ago. Now, another really important thing before we move on, another really important thing to know is that as insurance companies started getting a bunch of environmental claims tendered against their old CGL policies in the early 80s, they said, hold on now. And they started putting exclusions in their new CGL policies around 85 or 86. So that means that releases that occurred after 85 or 86 were most likely excluded from those CGL policies. Now, CGL policies today are still occurrence-based, and Rich will talk more about that, but environmental releases are now excluded from those. Products intended to deal with environmental releases are typically now on a claims-made basis, wherein the claim itself must come within the policy period or within a period of time written into the policy. Going back again to the old policies, depending on the language actually written into that policy, once triggered, historical CGL policies may be used for legal fees, defense against claims from third parties or from the state regulators or the federal regulators, site investigation and cleanup, interim remedial measures even, and you can build a legal case using payments from those old CGL policies. Remember, you're responding to liability with those policies. Potentially responsible PRP searches can be performed if you're in a commingled plume situation where a property has been used historically for different reasons, and potentially even prior costs that you've already spent out of pocket, or that your client or that the policyholder spent out of pocket, might even be able to be retroactively recovered. It's important to talk about who can use old insurance. I mean, it may seem obvious, but I think it's worth answering the question. Who can actually use old insurance? The answer is pretty simply policyholders. Policyholders are the entities that have the most straightforward right to the benefits afforded by their old CGL policies. They're the ones who pay the premiums. They're the ones who entered into the policy contract with their carrier. They're the ones that have this most straightforward right to tender a claim with those carriers. So we're talking a long time ago. These are old insurance policies. How do you find those old policies? And I mentioned that that's one of the things that we do every day around here is we conduct investigations to find these old insurance policies. Most people think there's some sort of vault or a database or website where you can go and find these old insurance policies, but that's not the case at all. We do three different major categories of things. The first thing we do is we do go out to those public records. We do go to physical files. We talk to the policyholders. We go back to the entity who's in the property today. Let's say someone new has come into the building. There's old files stashed somewhere. And the first step is to go see what's already in existence in the physical file. Our investigators have been in basements. We've been in the bow of the Queen Mary. We've been, in attics of old barns, removing dead possums out of the way and all kinds of crazy stuff. But the physical search of those files is the first thing that needs to be done. The next step is any leads that are identified as a result of that process. We take just good old gumshoe investigation techniques and we hit the streets. We talk to people, personal interviews. We may have to assist in the taking of affidavits, preparation of them. We do review those public records. We look at business records. We look for any evidence of a lead that indicates that our client or a policyholder purchased a CGL policy from a specific carrier or any carrier as far as that goes. The next step of the process is looking at some proprietary databases and records. We do have our usual places that we like to go and see if there's some evidence. I talk about usual fishing spots. There's a few normal places that we like to check first to see whether or not we're going to have any luck. We call it insurance archaeology. That's the practice of locating and retrieving the proof of existence, terms, conditions, and limits of lost or destroyed insurance policies. We have two primary channels of investigation. The first is just an all-out full investigation performed with the objective of recreating as much of the policyholder's portfolio as possible. And that's pretty straightforward. But I've talked about those usual fishing holes. The second investigation service we provide is more of a quicker look into the historical records, those usual hiding places. And our objective in that situation is to see how likely it is that significant evidence of coverage or proof of coverage will actually be identified during a larger full-scale investigation. So what I'm saying there, guys, is that with what we call IAX or Insurance Archaeology Express, you can go have a quick look and you can constrain the odds of potentially succeeding in finding your policies to cover the work that you do. Now, you may have picked up on the terms that I'm using here: evidence of insurance or proof of insurance. Oftentimes, locating just a policy number, a canceled check, or carrier information is going to suffice to prove coverage, because we've amassed a library of specimen policies over our 20-year history doing this kind of work. And we're not the only ones that have that. So there are other people that do this kind of work where they've got specimen libraries. So if we're out there looking for primary evidence, of course, the actual policy, but if we can find secondary evidence, maybe a policy number, maybe a canceled check, or even tertiary evidence that, a mention of a canceled check of a policy, we can take some of that information, go back to our specimen policy library, and actually pull out and prove up the terms, limits, and the specific policy language that might be in those policies. So the goal ultimately is to create one of these coverage charts. And that is a complete picture of the entire CGL portfolio for the client. Now, in many states and circumstances, this coverage is additive or aggregate. So as long as a contamination continued to occur, and I'm making little quotes here around the word occur, within the policy periods of subsequent coverage, you can add these things sequentially and end up with a much larger portfolio of coverage. Note also on this example, the coverage limits on older policies were less than later ones, right? The bars on the left are much shorter than the ones on the right. Demonstrates an important caution that old policy limits were written using the old value of $1, correct? Modern remediation dollars, though, the bills that you're sending are in today's dollars. And future dollars if you're providing cost estimates for cost of closures. So that discrepancy can create issues with available cleanup dollars at times. So it's best to temper our expectations sometimes regarding old policy limits. So just to give you a sense of how important old CGL policies are to the business of cleaning up contaminated properties, in just our little corner of the world, okay, just the enviroforensics corner of the world, we've identified over $4 billion of insurance assets for our clients. The universe of old environmental liabilities is slowly decreasing. We're cleaning up more and more all the time, and since a lot of these were old, your typical consulting activities intended to prevent releases are working, and we're working against the old universe of contamination. But the latent liabilities managed by insurance carriers from decades or over a century ago still remains huge. I want to give you a sense of what are some of the limitations of old insurance. It's not all fun and games. There are some serious limitations that you have to be ready to contend with during this process. One of the biggest ones is the fact that there are insolvent carriers. Perhaps your client or perhaps our client purchased a CGL policy, from a company that ended up going bankrupt or became insolvent later on. That's something to deal with. Those policies are not available. Dissolved policyholders as well. Sometimes during corporate history, one business becomes a different type of business. Let's say Old Co wasn't incorporated and New Co is an LLC, but the policy was actually purchased by Old Co. that coverage may not actually apply to the new company. Policy limits is another thing, like I just mentioned, we have to watch out for. State case law, your ability to recover at all from these old CGL policies is dependent largely on case law. What types of problems or what types of litigation has occurred that judges or courts have ruled upon that might limit or not limit our ability to recover from those old CGL policies. Legal fees can also stack up for our clients, right? Even though the policies typically afford the policyholder a defense attorney, one to deal with a regulatory agency or an impacted offsite property owner, does not apply to an attorney that might be needed to communicate with the carriers themselves about coverage, about what coverage is available. And another realistic situation, guys, is that coverage chart that I gave you or that I showed you that showed a full coverage portfolio, that doesn't happen all that often, especially with an old problem. There's usually gaps in coverage. There are policies that just can't be identified, and the policyholder or the responsible party could be left holding an allocation percentage of what needs to be done. And then another overriding issue is just that the clock keeps ticking, right? Time marches on. Every day, we're another day farther away from 1985, 1986. We're another day farther away from the time that occurrence happened. You know, another piece of paper has dissolved under acid ink. Another piece of paper has been subject to floods or fires. So every day it gets harder to find this old coverage. So that pretty much wraps up what I wanted to talk about. I'm going to introduce Rich here in a minute, but you know, the bottom line is there's still a large universe of contamination that can be cleaned up using a responsible party's old CGL policies if state case law allows it and if you can find significant evidence of the existence of those policies. So again, that about wraps up what it was that I wanted to say about using old CGL policies for environmental cleanup. So I wanted to turn things now over to Rich Reich with Aon to talk about some other environmental risk management tools that are actually on the market today. As Rich presents, keep in mind that some of what he says will be directly applicable to responsible parties. Some are actually going to be directly applicable to you as he gets into some of these other risk management tools. So with that, I'm going to turn it over to Rich. Rich, thanks a lot.
Okay, thanks, Jeff, and thanks, Regenesis, for inviting me. I'm happy to talk to everybody today. And first, I'd like to say that my picture probably belongs over the typewriter because when I broke into the business, people were still using typewriters. But anyways, my name is Rich Reich, and I am an environmental insurance broker with Aon, located out of the Chicago office. And I'd like to tell you a little bit about environmental insurance today. So let's get started here. So first, I'd like to bring up some recent claims issues that we've seen and see how we can relate it back to environmental insurance. The first example is a storage tank that was storing some contaminated water, and during some freezing weather, a pipe broke and released the contaminated water into the ground. And pollution insurance would be able to cover the cleanup of that contaminated water in groundwater and soil. Example B is air pollution release from a facility that's been operating under a permit for years, and a neighbor said that they got sick from that air pollution and made a suit against that facility, and then some other neighbors also made suits against that facility. So pollution insurance can protect from bodily injury, third-party bodily injury lawsuit claims. The next example is a chemical warehouse where a fire started and it resulted in firemen coming to the scene and spraying water and contaminated water running off the site and into a creek. And in that situation, there was a fish kill. And so again, pollution insurance would help pay for the cleanup, and it would pay for any natural resource damage assessment due to the fish kill. My last example is something that probably a lot of you can relate to, is contamination found from an old fuel oil tank that was missed during a phase 1 when a site is being redeveloped. And if you buy a pollution insurance policy that has coverage for pre-existing conditions, then the coverage for the cleanup of that contaminated soil related to the tank would be covered by that policy. So as Jeff talked a lot about general liability policies, I want to do a quick comparison of how GL policy and auto policy and umbrella these days now compare to coverage for regular pollution insurance now that the absolute pollution exclusion is added to every GL policy. And as you'll see here, there in the yellow, there is a little bit of coverage possible for third-party bodily injury, property damage, and maybe business interruption and transportation under the auto policy. But if you really want broad pollution insurance coverage, you have to go to this pollution insurance marketplace, and that's where you can find the broadest coverage for the most different needs. And so I'd like to talk today about some of the products that exist in the pollution insurance marketplace. And I'm going to talk mostly about the main products that exist. And so that's pollution legal liability that provides coverage for site owners and operators. Contractors pollution liability provides coverage for contractors operating at somebody else's site. And then there are combined general liability and pollution products that have been brought back to the marketplace where the coverage was removed for pollution from general liability. Well, now they're able to add that coverage back in. Then I'd like to talk a little bit about cleanup cost cap insurance. And I will not be able to have time to talk about some of the other products that are available in the marketplace, such as RCRA financial assurance policies, underground storage tank financial assurance policies, and lender policies. So first, I'd like to talk about the site pollution policy or pollution legal liability. And the main coverages that are available under that policy are for cleanup of pollution on your own site, on the insured's own site, or if it runs off into a neighbor's site. And then the next most important coverage is for third-party bodily injury and property damage and associated defense costs. Now, it won't cover first party like your own employees or first party property, but just third party. And included in that is diminished value of, potentially diminished value of neighboring properties, coverage for natural resource damages, and coverage for things like civil fines and penalties. Now, not coverage for criminal fines and penalties, and that coverage is only where it's allowed by the state. Other coverages that are available are for where the insured sends their waste for non-owned disposal sites. And so if one of those sites becomes a Superfund site, they could be protected by pollution insurance. And the same thing with transportation. If your waste or a product is being transported by your own employees or by third party and there's a pollution release, then the same coverages apply. Cleanup of pollutants, and then third party bodily injury and property damage and defense coverage. Some other things to know about pollution legal liability policies is that it's claims made coverage, it's not occurrence coverage, so the claim must be made during the policy term or during the extended reporting period. Coverage can be provided for both sudden and accidental and gradual pollution conditions. So if there's a slow leak, that coverage can be covered for, say, a slow leak from a tank. Coverage can also be provided in certain circumstances for known pollution conditions. We'll talk a little bit more about that later. Other coverages that are provided are coverage for natural disasters. So if there is a windstorm or a flood and it causes a pollution release, that resulting pollution would be covered. Coverage is included for mold, Legionella, and in some circumstances can be included for asbestos, lead-based paint, PFAS, disinfection of mold and Legionella, and things like virus and bacteria can also be covered. So nearly anything you can think of can really be covered by these policies as far as contamination goes. Interestingly, these policies can cover both pre-existing and new pollution conditions. So a pre-existing condition, like Jeff was discussing before, is something that happened in the past and has usually, it's easiest to cover it if it's unknown and happened in the past, and you do purchase coverage for pre-existing conditions at a site. We can, of course, also provide coverage for new pollution conditions, and those are conditions that occurred after the policy is incepted. Pre-existing conditions is where the spill or release occurred prior to policy inception. So these are really great flexible policies. They can be tailored to clients' needs, to contractual requirements. Usually they're purchased for up to 1 to 3 years, 3 years being the sweet spot, but we can go as long as 10 years on these policies. So next, let's talk about contractors' pollution liability, and that's going to provide coverage for operations of a contractor at somebody else's facility. And so it can be covered on a project basis or for an entire entity, and those entire entity policies are purchased by a lot of environmental consultants for a year. Now, the coverages on these policies are going to be the same as a pollution legal liability policy, and they're going to include things like emergency response costs, coverage for cleanup, coverage for non-owned disposal sites, coverage for transportation liability. These, interestingly, these can be written on an occurrence or a claims made basis, and so we prefer to write these on occurrence because that way you can bring back the claim years later to a policy that the term has expired. But in some situations, they're only able to get them on a claims made basis when it's a high hazard situation. We can also write these project specific for an owner controlled or contractor controlled situation where you want to cover all the owners and contractors together. They're done very conveniently for that. The rating is based upon the revenue of the project or the revenues of the entity and are not auditable, so they can't change at the end. We can include professional coverage on these policies, and for a project, they can be written up to 10 years and sometimes even longer for a project, including completed operations. So I'd also like to talk a little bit about cleanup cost cap insurance. And that provides coverage for a situation where you have a known cleanup and you're concerned that or the client is concerned that the cleanup costs might exceed budget expectations. So it really helps to provide for some certainty in these types of situations. And the cleanup can include, the cleanup costs can include coverage for both known and unknown conditions at the site. The project owner or a contractor can be the insured, and it can provide limits up to 100% of the expected cleanup costs. The ideal size is $3 to $10 million. And say you have a cleanup that's estimated, a firm estimate at $5 million, then the insurer would put a self-insured retention above that, maybe say $1 or $2 million more. And then if it exceeded that amount, the cleanup exceeded that amount, that's when the insurer would start to pay. And a lot of times the insurers are going to go ahead and put a copay on there of 10 to 20%. And that way there's still some skin in the game for the insured should it go into the insured layer. So the insurer is going to adjust that buffer, the self-insured retention, the copay, and the premium to account for the situation and how good the cost estimates are, how good they feel the cost estimates are. Premium runs at a rate online of 5 to 15%, with usually you can expect at least 10 to 15% rate online premium for this. And it really can be a useful tool in providing cost certainty and reliability for future planning. So I'd also like to talk about excess of indemnity, and that can be added to a site pollution policy and is based upon the financials of the indemnitor. And so the underwriter will look at the indemnitor, and if they're comfortable, and they will be willing to write insurance if in case the indemnity fails. So should the indemnitor go bankrupt or fail to perform on the contract, you have A-rated insurer to back up the indemnity. And so that will help a lot of clients feel more comfortable in these indemnity situations. The premiums on this can be significantly less than a cost cap, so certainly not nearly the 10 to 15% rate on line of the limits. And the deductible, which says, for example, it's $100,000, would be used then to enforce the indemnity legally. And insurers can write these up to a 10-year term, potentially up to 25 million in limits, and then sometimes we can even build upon those limits and go even higher. Next, I'd like to briefly talk about environmental casualty products and just make you aware of those. And so previously we said that there's the absolute pollution exclusion in general liability policies these days. Well, now several of the insurers, AIG started this, and several of the other insurers are offering this product now, are adding coverage for pollution back in a separate insuring agreement. And so they can add to the general liability, they can add site pollution liability, they can add contractors pollution liability and keep that on an occurrence basis. The site pollution policy, remember, that always going to stay on claims made. And then they can also add in professional coverage as well. And so you have these nice combined coverages that can cover pollution and general liability, and it can also cover products pollution. So should there be a release from a product that the insured is blamed for, the policy can provide coverage as that as well. I just want to talk about what kind of industries buy pollution insurance, and it's basically every industry buys pollution insurance. A lot of it is construction related, natural resource related, oil and gas, chemical, pharmaceutical, agricultural, industrial, real estate, so and even financial for lenders. So we really do see all different kinds of industries buying pollution insurance these days. And briefly, I'd like to talk about what is needed to get a quote. And again, you don't have to have all this information, but the more information that you have, the better. So we would need, for a pollution legal liability quote, we would need to have the statement of values, list of locations, prior loss runs, a vehicle list if we're looking for transportation coverage. And it's important that we get any environmental reports that are available, and especially if you're looking for coverage for pre-existing conditions. So that's very important. We would need a list of storage, storage tanks, and especially underground storage tanks, because those need to be specifically scheduled to a policy. And then we'd also like to know about any past pollution releases or claims for that client. For a contractor's pollution policy, we would need to know the scope of work of the operations, or if it's going to be a project, we would want a copy of that project and description of operations. We would need to know the revenues because it's underwritten based upon the contracting revenues. And then we need to know the term of the project, or if it's an entity-based project, usually it's 1 or 2 years. If professional is going to be added back in, then we need to know what percentage of the contract is related to professional and design. Then if we're looking at a submission for combined policy, we would need the information described above, as well as the standard property and casualty submission and financials. So now that I've told you about what some of the products are, I'd like to kind of give you an update about what's going on in the marketplace these days. And we do have a number of emerging contaminants, and when we see those, a lot of claims for these different contaminants, the insurers get nervous and they start putting in restrictions of coverage. And so here's a list of some of those contaminants that we see those restrictions on. Particularly these days, we've been seeing it for ethylene oxide and mold. We've seen a lot of mold claims, and so we're seeing restrictions on things like mold and Legionella. And then, of course, the big new item is PFOAs or PFAS, and we're seeing a number of restrictions by the insurers, removing that coverage completely, especially if it's a landfill or airport, military bases where they may have used firefighting foam, or an industrial client where they may have used PFAS in their operations in the past. We're seeing insurers remove that coverage altogether in those situations. But there's always room for negotiation in these policies, and that's the nice thing. In the future, we do expect that further restrictions will occur for these types of things and other things as they come up. Real quickly, I'd like to talk about COVID-19. And we do offer coverage for virus and bacteria in some of our policies, but a lot of our policies do have exclusions for communicable diseases. And so basically what we found is that most likely for claims that have been made for COVID-19, coverage has been limited at best and likely uncovered. And now what we're seeing is that to make sure that the insurers are not covering it, they're adding exclusions to the policy for COVID-19 going forward. So we're seeing a lot of those exclusions going forward. And just to talk about what's going on individually for the products that we were looking at previously for the PLL site pollution liability coverage, we are seeing for high risk industries, we're seeing some pretty significant increases of up to 10% and maybe even higher, depending on the industry, for things like oil and gas companies, mining, chemical companies, petroleum storage, etc. Now, in areas where the risk is more benign, we are definitely seeing much lower increases in premium, maybe keeping up with the level of inflation. So definitely not as high as the increases we're seeing on other lines of insurance like property and umbrella. And some of the insurers are definitely putting on coverage restrictions like we discussed, and they're lowering limits in some circumstances. So we may have to go out to the marketplace and look for additional limits. And some of the insurers, and definitely on these higher risk situations, are not willing to write multi-year terms. They're only willing to write 1-year terms, if at all. For the contractors pollution liability policy, it's a very competitive marketplace. It's very stable right now. All of the insurers are very interested in writing this. We haven't seen as many claims for this as we have seen on the site pollution marketplace. So good, stable market for contractors pollution right now. Increases have been kept in check. Maybe some restrictions around development in some situations, things like asbestos and mold, but for the most part, limited restrictions and capacity is readily available. Then talking about the combined form, we're definitely seeing more markets interested in writing this combined form, and that's great. AIG did it initially, and we've seen significant growth, and we see a number of our clients that are purchasing only general liability insurance now looking at combining that with environmental insurance. So it's nice combined package, and can provide a good convenient and cost-efficient way to get some environmental coverage. Now, this coverage is definitely best suited for middle market accounts, and they're very picky and choosy about what industries. So definitely the chemical industry is one industry that they're interested in, but there's some industries that it is not a good fit of whatsoever. And lastly, I'd like to take a little look into the future, into the crystal ball here, and talk about what our projections are going forward. And so as far as capacity goes, we're definitely seeing reduced capacities. We're seeing that some of our incumbent insurers like Zurich and AIG are no longer even writing site pollution coverage. And so that's reducing capacity, but we are seeing some new insurers come into and start writing pollution insurance that haven't had that long-term book of business. So it is being moderated by new insurers coming into the business, which is great. Coverage, again, we are seeing some areas like older underground storage tanks, mold, PFAS, where coverage is being reduced, maybe on redevelopment projects in certain circumstances, same kind of thing. And so we are seeing coverage reduced in certain circumstances, but overall, very competitive marketplace, and coverage is very good and broad. Claims and losses, we are definitely seeing more claims, and I think that's just an educational thing, making sure that our clients are putting in the claims on their policies when they need to, and we're happy to help our clients do that and make sure that they are getting the full benefit of their environmental insurance, and that now we're seeing more losses being paid by the insurers, and that's a good thing. The insurers are there to pay the losses, and that just helps the industry, and that's why the insurance is being purchased in case a big loss comes along. For limits and retention, we're definitely seeing higher limits purchased by our clients, and that's due to the higher defense costs out there and basic inflation in cleanup and other things. Our clients are looking at higher limits all the time, and retentions, probably looking at higher retentions too, because when you have a higher retention, that pays for more catastrophic type risks, and that will help reduce the premium. So maybe looking at higher limits, then offsetting that with a higher premium. As I discussed previously, pricing is increasing overall, and especially for the higher risk areas in environmental. But overall, the pricing increases have been pretty moderate, and certainly not anything like we're seeing in some of the other lines of insurance. And so thanks for listening. At this point, we'd like to open the floor and answer any questions that anyone may have.
All right, thank you very much, Rich. So yeah, as you mentioned, that does conclude the formal section of our presentation. At this point, we'd like to shift into the question and answer portion. Before we do this, just a couple of quick reminders. First, you will receive a follow-up email with a brief survey. We really appreciate your feedback, so please take a minute to let us know how we did. Also, after the webinar, you will receive a link to the recording as soon as it is available. All right, so let's circle back to the questions here. This is a question for Jeff, and it is, I've always heard that insurance companies want to settle environmental claims. Can you talk about that?
Sure. I've always heard that too, and sometimes if the problem is well known, right? So insurance, when insurance companies defend a policyholder, there's a couple of steps. The first one is to defend, like I said, and during that process, we need to investigate the damage. We need to investigate how bad the problem is. And of course, for environmental folks, that's subsurface investigation, that's evaluating the nature and extent. And at the end of that process, then we know how big the problem is. And if you can really constrain the costs to the point where you know what the damages are and communicate that to our clients, insurance carriers, they may be comfortable settling that claim. What they don't want to do is settle a claim that ultimately is going to come back, because they really would prefer to close the file in our experience. So, it's not always a great idea to say, hey, I've got a problem, write me a check for settlement. you really do need to go through the process to understand and really be able to quantify that claim first.
Okay. All right. So here's another question. This one is for Rich, and it is it better to buy a long-term pollution policy instead of a shorter term?
Yeah, so that's a good question. Of course, it's going to depend on what's being offered by the insurance companies, but a lot of times they don't want to offer more than 3 up to 5 years, but we can get coverage for up to 10 years. But to answer your question, usually it is better to buy for a longer term if it is available, because the premium over the term of the policy is going to be significantly less on a per year basis versus buying an annual policy. So we recommend that if you can get the longer term and lock in the coverage, it's a good idea to do so.
Okay, thanks, Rich. Let's see. Here's another question for Jeff, and it is, are asbestos and lead paint covered by old CGL policies?
Yeah, that's also a good question. And actually, it's got a fairly complex answer, but it can be short. Bottom line is, will an old insurance policy pay to go remove asbestos and lead paint? Typically, no is the answer. Not only are there pollution exclusions, but there are also owned property exclusions in those old GL policies. And the removal of those building materials typically falls under that exclusion. So they're not really contaminants per se. Now, on the other hand, if you're a company and you had a series of workers and some of those workers were exposed to asbestos, let's say, and now later they've got mesothelioma, and perhaps they want to make a claim against their old employer or the policyholder. We're hired a lot. Policy Find is hired a lot to go find old CGL policies for companies in that situation. And in those scenarios, although it's not pollution related, it is an environmental claim. It's a long-term claim that can be made against those old policies.
Okay, thanks, Jeff. So we have another question here for Rich, and it is, can I buy pollution insurance for a site without a lot of information?
Yeah, so definitely you can buy pollution insurance without a lot of information. And we always work with the underwriters and we work with our clients to get as much information as possible, because the more information that is available to the underwriters makes them feel more comfortable. And in that case, they're willing to give broader coverage. So we definitely say the more information, the better. But if there is not that much information available, that doesn't rule out the possibility of getting coverage.
Okay, thanks, Rich. So here's another question. This one is for Jeff. Jeff, in your experience, how long does it take to fund a client's old insurance and get to the point where the carriers are paying for work?
It can take quite a while, guys. I mean, honestly, in a full investigation into the existence of old CGL policies, sometimes we're talking about something from the 1940s or 50s or 60s. That process can be pretty time consuming. We commonly will take we'll have our initial preliminary results and assessment and consult with the client. 60, 90 days, we're able to kind of run the traps and see what we've got. Very commonly during that process or during that conversation, though, we're making recommendations like, hey, we saw some stuff over here that we'd like to chase more. We'd like to do additional investigation. But let's say it takes 6 months, okay, and then you tender a claim. You've got a portfolio of old GL carriers and policies, and you're like, hey, I've got this environmental liability. I need to tender these old carriers. It can be a process of communicating back and forth with the carrier until the time that they will write a letter back to your policyholder client and say, we are defending you in this matter. please work with us as you move forward. So I like to say anywhere between 6 months and 9 months. If everything goes fairly well, our clients can be funded by their carriers as they authorize us to move forward with some investigative work.
Okay, thanks, Jeff. So we do have another question. This is for Rich, and it is, what kind of pollution insurance coverage can I get for known conditions?
Yeah, so if there is a known condition at a site and the EPA is saying that it needs to be cleaned up, it is very difficult to get cleanup coverage for that known condition. But we can get coverage for known conditions under certain circumstances, and that's where it's good to have an experienced broker like Aon that really has worked on this type of product for years. So, for example, say a cleanup has been finished or it's being left in place, we can get coverage for reopeners coverage in case the EPA comes back and in the future says, hey, you have some more work to do here for one reason or another, or it was found, the contamination was found in a different place and you have more work to do. So we can get reopeners coverage, and that can give real comfort to an owner of a facility that they're covered in case the project, the contamination issue ever comes back to them. We can also be very creative and use the excess of indemnity as previously discussed. We can get coverage for third-party bodily injury and property damage for a known condition if we can't get coverage for cleanup. And we may be able to work on it locationally as well. So, for example, if there's contamination in one part of the site and it's known pretty well to be contained within that area, we may be able to get coverage for other parts of the site in case it's found there. And some circumstance comes up where it's found in a different part of the site. Or we may be able to get, say there's a known pollution condition on a site, we may be able to get coverage in case it traveled off the site. So this is where we can really show our creativity and perhaps be able to get coverage for known conditions. But as far as unknown conditions goes, that's really the easiest thing for us to cover. It's very easy to cover unknown conditions.
All right, thanks, Rich. So we have another question here, and this one is for Jeff, and it is there any reason why a client would not want to pursue an old insurance policy to fund environmental cleanup?
Yeah, that's an interesting question. A lot of people would take the perspective, free money, why not? It's not really free. I mean, premiums were paid back in the day. One example, I guess, that I can think of off the top of my head, I did have a client who was well aware of some old environmental policies that we had identified for them, ultimately decided not to make a claim against those because they saw that, remember that asbestos scenario that I had come up with, or that I talked about last question. They knew that they were going to have potential liabilities coming down the road. And they chose not to tender on subsurface contamination because ultimately they felt that the risk that they would have in the other category outweighed the environmental cleanup costs. And I guess to put the answer in a nutshell, if you think that there's additional risk out there to you as a policyholder, that you want to preserve that coverage for the future, that would be a good reason not to tender on known old CGL policies.
All right, so thank you very much, Jeff, and thank you, Rich. That is going to be the end of our chat questions. If we did not get to your question, someone will make an effort to follow up with you. If you'd like to learn more about risk solutions from Aon, you can visit aon.com. If you'd like to learn more about environmental services from EnviroForensics, please visit EnviroForensics.com. And if you'd like to learn more about remediation solutions from Regenesis, please visit Regenesis.com. Thanks again very much to Jeff Carnahan and Richard Reich, and thanks to everyone who could join us. Have a great day.